We've got so many beaten down tech stocks in this market, but are any of them worth picking at? You know my rule. When the Fed is getting ready to raise interest rates, you circle the wagons around profitable companies that make real stuff and have cheap valuations. That applies to plenty of tech names now, too, because of this sell-off. Take Marvell Technology, the semiconductor company that makes chips for storage, data center, 5G networks, and even the auto industry. This is a stock we've owned for the Charitable Trust since 2019. When it was trading in the low 20s, it's now at 60, although it's come down huge from the low 90s, thanks to the sell-off over the last few months. Hey, that includes, by the way, an ugly 4.5% decline today, as all the semis were for sale. But here's the thing. Marvell actually reported a fabulous quarter earlier this month, a solid top and bottom line beat. That's just magnificent 68% revenue growth. Management also gave a very bullish forecast for the current quarter, yet right now you can buy the stock at a $5 discount versus where it was before earnings. Even better, Marvell sells for just 20 times earnings next year. I have to laugh because you shouldn't be able to get it at this price. It's practically a value stock at these levels. But given the interminable sell-off, no one wants to hear the good side. Don't take it from me, though. Hey, let's hear the good side. Let's check in with Matt Murphy, the president and CEO of Marvell Technology. You get a better read on where his company's headed. Mr. Murphy, welcome back to Mad Money.
Hey, Jim, great to be here. Thanks.
All right, so, Matt, you pretty much hit it on every single line. You beat everything. You got 5 segments that you trounced. Could you walk us through so that people understand that your company's doing well, even if the stock's been hit?
Yeah, thanks, Jim. Yeah, company's performing extremely well. If you look at our results, it was a solid beat and raise. That was already off of, very strong guidance we had provided, last quarter. So even a step up from there. And to your point, all 5 of our end markets were up and performing well, in particular the data center end market, which has just been on fire, Jim.
All right, so let's look at the data center. People are trying to figure out why the data center stocks are going down. I come back and say that it has really, at this point, nothing to do with data center. This is still the hottest area. Then the rebuttal is, it must be slowing. Matt, it's not slowing at all.
No, not at all. I think on a couple of factors. If you just look at it at the top level, Jim, the largest cloud operators are going to spend significant CapEx in calendar 22 to continue to expand their offerings, whether that's for their traditional internet services, for cloud computing, you name it. All of them have very strong capital expenditures planned. And that's fundamentally underpinned, if you look at it, from the semiconductor technology that's required to enable all these services in this build out. So we see CapEx as being very strong and demand very strong from the cloud. And on top of that, we're a share gainer. We're adding more content. We're in new applications. So there's even an accelerated growth on top of the end market growth.
Carrier infrastructure, equally as hot.
Yeah, that's where our 5G business is, Jim, which I think, you mentioned early on. You've been in the stock for some time at the early stage of the 5G cycle. In this past quarter, in Q4, that business was up over 30% sequentially. Sequentially. And then what
You're
we
talking
said
about quarter to quarter.
Sequentially. Quarter to quarter in Q4, 5G was up over 30%. And then what we guided for Q1 was the carrier overall segment to be up again. So, and we see actually our 5G revenue continuing to accelerate through this year, including a very strong second half. So 5G is performing extremely well on the basis of our new products, on the content gains we saw in this 5G cycle, and our lead customers adopting our products, along with new applications that you're starting to hear about, like virtualized RAN, which is now you're getting the large cloud operators and even non-traditional telecom players like Dell, as an example, getting into this segment. So there's a whole new rich set of applications that 5G is going to enable that Marvell is helping to power.
Does it matter that a major city in China has a bad COVID problem?
Well, I think more broadly, Jim, if you look at the situation in China, the lockdowns certainly have the potential to have all kinds of disruption, in the electronics industry. In particular, in Shenzhen, which I've visited many, many times over my career. It's a city of like 17, 18 million people. So there will be some disruption, but let's just take a step back. Since the beginning of the pandemic, the entire semiconductor industry has been battling with various supply chain disruptions everything from the initial lockdowns to other impacts, we've seen, particularly in Southeast Asia. And the industry's rallied, and certainly Marvell has rallied, even though we're still supply constrained. If you look at our organic revenue growth, if you include Inphi plus Marvell together, we're growing the company in the high 30% range. So we're continuing to get more supply, but demand continues to outstrip it. So a lot of challenges in the world, Jim. It's not going away anytime soon.
Do we have to worry about neon, a shortage of neon because of Russia?
Well, I think, I look deeper into the supply chain. A number of the companies that are critical suppliers that utilize neon have done a fair degree of stockpiling. That's my understanding. And so, to the extent that those stockpiles are well positioned, the industry should be able to adapt. But we have to see what happens. I think we're on an unprecedented time, both with respect to what's going on in Russia and the Ukraine, as well as the disruptions now kind of coming full circle again in China. So it'll continue to be a dynamic environment to manage through.
All that said, let me just do the math. You're a 30% grower selling for 20 times next year. People who say that's expensive, Matt, don't know this business. I've been in it for 40 years. Very rare that you find this kind of dislocation. I think it has to play out, Matt. I really do. Just has to play out. I don't know what else to say.
I think so. When we indicated the 30% number, by the way, for the year we're in, that was in our last earnings call.
Right.
And if you look at our Q1, we're already tracking ahead of plan. The 30% that we had guided did not even include the acquisition we did of a company called Innovium, which we said would layer in an additional $150 million of revenue, which is up huge from where they were. It was a private company that we acquired. And then you look out into calendar 23 and 24, and we see very robust demand from all of our design wins we've gotten in the cloud, in 5G, in automotive. So this is a story that's going to continue for many years. We're just going to stay heads down and focused on executing on our business.
Exactly what we need. Well, look, Matt Murphy, I appreciate you coming on. I appreciate also waiting, because I know you reported last week, President and CEO of Marvell Technology. Guys, if I hear that technology is expensive once more, I look at this company. I can't get this kind of discount and this kind of growth. Thank you, Matt.
Yeah, thanks, Jim.
Okay, Mad Money's back in for the break.